In just 48 hours, 3 announcements shook Silicon Valley so hard that stock prices jumped by billions. CEOs started making public confessions about their regrets, and analysts began warning about something they're calling circular trading madness. What happened? The biggest AI money grab in history just unfolded before our eyes, and the implications are absolutely staggering. We're talking about deals so massive they make previous tech investments look like pocket change. But here's the twist. Some of the smartest people in finance are terrified about what these deals actually mean. And after digging deep into the numbers, I can see why they're losing sleep. The deal that broke all the rules. Let's start with the bombshell that sent shockwaves through the industry. Elon Musk's AI company, xAI, just announced they're raising $20 billion. Yes, you heard that right, $20 billion with a B. But here's where it gets interesting. This isn't your typical Silicon Valley funding round. The structure is so innovative it's either genius or completely insane, depending on who you ask. They've split the money into two buckets, $7.5 billion in traditional equity investment and $12.5 billion in something called a special purpose vehicle. This SPV isn't just sitting there holding cash, it's buying NVIDIA's most advanced chips and then renting them back to xAI for 5 years. Think about that for a second. Investors are essentially buying the hardware that xAI needs, then leasing it back to them. It's like buying someone a car and then charging them monthly payments to drive it. The rental payments become the investor returns, and if xAI goes under, the investors still own billions of dollars worth of cutting-edge AI hardware. It's risk management on steroids, but here's where your jaw will drop. NVIDIA, the company selling the chips, is also investing $2 billion in this deal. They're literally getting paid twice. Once for selling the hardware, and again as an investor in the company buying their hardware. Some are calling it brilliant. Others are calling it suspicious. The CEO's shocking confession. Enter Jensen Huang, NVIDIA's CEO, who just made one of the most revealing statements in corporate history. In a live television interview, he looked directly into the camera and said his only regret about investing in Musk's company was that he didn't give him more money. But wait, there's more. Huang also revealed that NVIDIA is simultaneously investing $100 billion in OpenAI over the next decade. Let that sink in. We're not talking about millions or even single-digit billions anymore. We're in triple-digit billion territory, and Huang is publicly stating he wishes he could invest even more. His reasoning? Almost everything that Elon is part of, you really want to be part of as well. This isn't just business. This is personal conviction from one of tech's most successful leaders. But it raises a disturbing question. Are these investments, or are they something else entirely? The move that stunned everyone. Just when you thought the story couldn't get wilder, AMD dropped a bombshell that left even Huang speechless. They offered to give OpenAI 10% of their entire company, not sell, give, in exchange for a promise to buy 6 gigawatts worth of AMD chips over several years. To put this in perspective, AMD is offering roughly $16 billion worth of equity to secure this deal. They're literally betting their company's future on OpenAI's success. The warrants they're giving OpenAI will allow them to buy 160 million AMD shares at virtually nothing, just 1 cent per share. Huang's reaction was priceless. He called it imaginative and surprising, then added with barely concealed bewilderment, "I'm surprised that they would give away 10% of the company before they even built it." Translation: even the king of AI investments thinks this move is crazy. The market's response was immediate and dramatic. AMD's stock exploded upward by 43% in a single week. But here's the genius part. If AMD's stock price hits around $600, OpenAI gets their chips essentially for free through the value of their equity position. It's the ultimate win-win, assuming everything goes according to plan. The circular trading nightmare. But some very smart people are sounding alarm bells, and their concerns are keeping Wall Street analysts awake at night. They're calling it circular trading, and once you understand what's happening, you'll see why they're worried. Here's the pattern. NVIDIA invests $100 billion in OpenAI. OpenAI takes that money and uses it to lease NVIDIA's GPUs and pay for computing power from companies like CoreWeave. But plot twist, NVIDIA has also invested in CoreWeave and many of these other companies. So NVIDIA's money flows to OpenAI, then back to NVIDIA and NVIDIA-backed companies, creating a circular loop of investments. It gets even more complex. OpenAI is paying $22 billion to CoreWeave for AI data center access. CoreWeave then turns around and Nvidia buys up to $6 billion worth of CoreWeave's computing power. The money just keeps circling back to the same players. Critics argue this creates artificial demand and inflated valuations. Think of it like this. Imagine if car manufacturers started investing in ride-sharing companies, who then used that money to buy more cars from the same manufacturers, who then invested more money in ride-sharing companies. At what point does real demand end and artificial inflation begin? The uncomfortable truth about profitability. Here's where the story takes a sobering turn. Despite being valued at $500 billion, making it one of the most valuable companies on Earth, OpenAI is hemorrhaging money. In the first half of this year alone, they generated $4.3 billion in revenue, but lost $7.8 billion. Even Huang admitted in his interview, they don't have the money yet. He's talking about OpenAI, the company he just committed $100 billion to support. They'll need to raise that money through exponentially increasing revenue, equity, or debt. In other words, they're betting everything on future growth that may or may not materialize. This raises the million-dollar question, or should I say, the $100 billion question. What happens if the AI revolution doesn't generate the massive profits everyone is expecting? What happens if these companies can't turn their technological capabilities into sustainable business models? The European response. While Silicon Valley was making these massive bets, Europe wasn't sitting idle. The European Union just launched their Apply AI strategy, essentially declaring war on American AI dominance. Their research reveals some fascinating insights about the global AI landscape. European analysis shows that while everyone's talking about AI, there's a massive skills gap. Companies are desperately seeking AI engineers, machine learning developers, and data analysts, but universities and training programs are focused on robotics, ethics, and general AI concepts. The market wants generative AI expertise, but the education system isn't delivering it. Even more interesting, they found that AI education is concentrated almost entirely in technical fields. There's virtually no AI training in social sciences, law, engineering, or manufacturing, exactly the areas where AI will have the biggest impact on regular people's lives. The cultural revolution. Perhaps the most surprising perspective comes from an unexpected source: Hollywood. George Miller, the legendary director behind Mad Max, just made headlines by comparing the AI revolution to the Renaissance. Miller argues that AI isn't destroying creativity, it's democratizing it. He points out that kids under 13 are already making films using AI tools without needing to raise money or hire crews. It will make screen storytelling available to anyone who has a calling to it, he explains. But Miller also makes a crucial distinction. While AI can replicate appearances and even mimic styles, it can't replicate the human essence that comes from collaboration between actors, directors, and writers. You might be able to create something that looks like Marlon Brando, but you'll never capture the magic that made Brando himself irreplaceable. What this all means. So where does this leave us? We're witnessing the largest financial bet in technology history, over $140 billion in announced investments, all betting on the idea that AI will revolutionize everything from entertainment to manufacturing to how we work and live. But we're also seeing warning signs that this might be the most sophisticated bubble ever created. When companies are investing in each other in circular patterns, when stock prices jump 40% based on promises rather than profits, and when the biggest investors admit their portfolio companies don't have the money yet, we might be looking at a house of cards built on brilliant technology but shaky financial foundations. The next 12 months will tell us whether we are witnessing the birth of a new industrial revolution or the setup for the most expensive lesson in financial history. Either way, the decisions being made in Silicon Valley boardrooms right now will shape the next decade of human technological development. One thing is certain: the AI arms race has officially begun, and the stakes have never been higher. The question isn't whether AI will change the world. It's whether the companies betting everything on that change will survive long enough to see it happen.